Hello, my friends. This is the video that I made on natural gas prices on December 15th of this year, when the price of this asset was, as you can see right here, at $3.280. And my main assumption was that we have quite a wide range of price action, and it was set from $3 to $3.55 mark. And I have to admit that as long as we were at this price range, it was very difficult to assume in which direction we might go. But at the same time, guys, because of the retest of its swing high, and it was a some kind of double top pattern, my main assumption was that most likely we should retest $3 mark, the lower border of this range, and potentially we could even break it to the downside. And guys, take a look right here. From this point, we went lower. And I have to admit that we didn't retest the lower border of this range, but we had an attempt to retest its previous swing low, and right after that we went higher. And guys, take a look right here. If I mark this range of resistance with the horizontal ray, as you can see, we retested for the first time this level of $5.5, went to the downside. Let's switch to hourly time frame to see more properly, even on 30 minutes time frame. As you can see, we retested it exactly to the tick, then pulled back a little bit, then broke out to the upside with the conviction of volume. Then, guys, take a look right here. As in the textbook, we retested it from the top and went even higher. So technically, I made the wrong prediction because my main assumption was that we have to break potential $3 mark. But at the same time, guys, I told you not to enter any position because it was too risky. It was basically just an assumption without any grounds, and that is why you didn't lose any money. And to be honest, I have to admit that it is very good that I made this mistake, because it shows how to identify the risks and stay aside from the trade because market might go against you. And it happened. And guys, that is the evidence of the power of technical analysis. And if you want to know more about technical analysis, if you want to enhance your trading skills, feel free to subscribe to my YouTube channel and to join my Patreon account, where for the $35 a month you will be able to drastically enhance your trading skills. On top of that, guys, for the first 100 subscribers I will do a giveaway. I will do a technical analysis based on your request on any asset that you might find. On top of that, guys, and it is the most lucrative offer, for now there is not so many people inside the Discord group. That is why almost 100% of my time will be dedicated to you, and it is pretty much a one-on-one training for the value of $450 a month, but for the fraction of this cost, for just $35 a month. And I think it is quite fair deal. I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up. So guys, and let's take a look again at its price action. Let's zoom out to, let's say, 4 hours time frame, and let me show you all the price action without any drawing tools. You can see that this asset from its swing low that it established back in August the 5th and August 26th, we went higher. And what is more importantly, guys, take a look on a daily time frame. We broke, let me show you this in details, we broke its swing high right here that was established on October the 30th of last year, and for now we are moving higher. And this breakout shows quite decent potential for the upcoming months, guys. It is not a short-term perspective, but for upcoming months we potentially might see even higher price action. Everything I will show you in just several minutes, but for now let's take a look at its fundamentals. So what was the reason for this movement to the upside? We are on trading economics, and let me quote you this. US natural gas futures rose further to over $3.7 per MMBTU on Friday, the highest in over 1 year, as bets of stronger global LNG demand magnified the outlook of higher domestic consumption. Fresh forecasts of a cold front in the US halfway through January drove the industry to raise demand forecasts by 18 billion cubic feet into the weekend. This coincided with the data from the EIA showing that gas storages fell by over 100 BCFD for the second straight week. deepening the anticipated start to the withdrawal season. In turn, the decreasing likelihood that Europe will continue to receive Russian gas through Ukraine drove investors to take long LNG position as EU members search for alternative gas sources. This raises demand for US LNG at the turn of the US presidency, with President-elect Trump pledging to issue more LNG export permits, driving firms to favor more profitable exports instead of cheaper gas sales domestically due to the ample domestic supply. So guys, you can see that the reason for this movement is pretty much political reason, on top of the quite natural reasons of higher domestic consumption. We can see that potentially we might have a lot of export of LNG from the United States to Europe, where the gas prices are much higher than in the United States. That is why, guys, natural gas prices rose to the pretty much highest levels from, let me show you, from January of last year, from January the 9th. Almost for 2 years period we've broke this pattern, and definitely it is quite decent sign from the bull side. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, to be honest, I have to admit that this movement to the upside in the long-term perspective definitely leads me to the conclusion that we might see higher price action. But in the short-term perspective, guys, take a look on a 2 hours time frame. Let me show you this in details. We have a bearish divergence, bearishly diverging our side. We have higher highs on the price action with the lower highs on our side. On the one hand, we retested the range of resistance that the range of support that previously was the range of resistance, and it is a very good bounce to the upside. But on the other hand, guys, I have to admit that we have to unload a little bit all the indicators, because let's take a look on hourly time frame. We also see bearish divergence, lower highs on our side with higher highs on the price action. 3 hours time frame, pretty much the same pattern. 4 hours time frame, well, not so highly overbought, but definitely we also can identify bearishly divergent our side at this point. On top of that, guys, if you take a look on a weekly time frame, let me show you without all the drawing tools. In my previous video, I showed you this set of candles, which shows that we were in an indecisive phase. And that is why, guys, I identify the range in between $3 and $3.55 as the range of nowhere's territory. But at the same time, guys, this movement to the upside pretty much confirms the breakout above this range of resistance, because the weekly candle already closed. We don't have any trades right now. The RSI is pointing up, and this breakout pretty much confirmed with the most recent price action. This means in the long-term perspective, I still think that we might go higher, but at the same time, in the short and medium-term perspective, I think we might retest again. Let me turn on all the drawing tools. We might retest again this range of support, and even might have an attempt to break it to the downside. But then eventually we will lead to higher price targets. So what should you do if you want to enter the position? Guys, I have to warn you that potentially you can accumulate your position on lower levels, because at least on several time frames, like 1 hour, 2 hour and 3 hours time frame, we have to unload the bearishly divergent RSI, and that is why, guys, wait for more signs of its recovery. Wait for the potential double bottom pattern from the range of support, and then you might accumulate your position, you might accumulate your long position with the stop loss. Well, stop loss is quite low, to be honest. It is we might find some support at $3.49. Yes, I think $3.49 might be $3.45 to $3.49 might be the range of your stop loss order, because if it goes below this level, most likely the short-term downtrend continues. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gon' live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you.